Note number 2. Provide, and this is a very common note, it's your depreciation and your disposal note. So what we are looking for in this is 5 things, which will always be. We are looking for, so I'll just read the note first. Provide for depreciation on delivery vans at the annual rate of 15% cost from date of purchase to date of sale. Note, on 31st of the 3rd, 2016, a delivery van which cost 40,000 on 30th of the 9th, 2012 was traded in against a new van that cost 48. An allowance of 18,000 was given on the old van. The cheque for the net amount was entered in the bank account but was incorrectly treated as a purchase of trading stock. These were the only entries made in the book in respect of this transaction. So I have the accounts here. The accounts we are going to use are delivery vans, depreciation, disposal, and the last bit says that the net amount of the transaction was incorrectly treated as a purchase of trading stock, so that's going to be purchases. Okay, so like I said up here, you're looking for 5 things. So you're looking for a new delivery vehicles figure, you're looking for a P&L depreciation figure, you're looking for an accumulated depreciation figure, you're looking for a profit or loss on disposal, and most of the time it's a loss, and you're looking for a new purchases figure. So there are a lot of marks going for this note, probably around 15 or 20 marks. So I'm going to take you through it. It's going to take a few minutes and I'll explain where every number comes from. So first of all, we start with the opening balances of what we know. So first of all, if we go to the question, the trial balance, I am looking for, up here, we have delivery vans that cost 150,000 and trial balance figure 85,000. So that tells me cost 150, I'm going to put that in. Depreciation is the difference between these two numbers, which is 65,000 depreciation. So when I go back here, my opening balance for delivery vans is 150,000. My opening balance for depreciation is 65,000. I also have an opening balance for purchases. If you look at the trial balance, that opening balance is 536,500. Okay, so those are the opening balances we have. So this note always follows the same way. So we'll start with the delivery van which was disposed of, cost 40,000. So delivery van's disposal, we credit 40,000 in the delivery van's account and we debit it in the disposal account. Okay, so that was the old van gone. The new van cost 48,000 and an allowance of 18,000 was given on the old van. So in the delivery vans, we're going to put allowance 18,000, that's like a trade-in, and we're going to credit that in the disposal account, 18,000. Now it says the check for the net amount of the transaction. So the new van cost 48, we were given an allowance of 18, so the amount that actually came out of the bank was 30,000. So we debit delivery vans 30,000, we credit purchases 30,000. That's how much was actually paid for the new van. Okay, so we have some figures. The next figure we're going to work out takes a bit of calculation. We are going to, when you dispose of a van, you must dispose of the depreciation as well. So we are looking at some dates here. The van was bought on the 30th of the 9th, 2012, and it was traded in on the 31st of the 3rd, 2016. So what I'm going to do at the side here, how many months is that? So in 2012, that was October, November, December, 3 months. Then we had the whole of 2013. I'll just put 13, 14, and 15. So that would be 36 months, 3 years. And then in 2016, again, we had 3 months because we disposed of the van on the 31st of March. So in total, 42 months worth of depreciation. So the calculation would be 40,000 at 15%. At 15% divided by 12 multiplied by 42. And that would give us an answer of 21,000. So 21,000 would be your answer. Where does that go? That is your disposal depreciation of 21,000. So we debit depreciation, we credit the disposal account, 21,000. Okay, so that's the information for that. So now we have that information for the disposal depreciation. We can go ahead and we can balance off some of these key accounts and get some figures. So first of all, I'm going to deal with the disposal account. If you add up both sides, you have 40,000 on this side, you have less on this side, you have 39,000 on this side. So we are going to have here a loss of 1,000 in this account. So there is a loss on disposal, because if you think about it, the delivery van was 40,000, take away depreciation of 21, which means it was worth 19, but you only got a trade-in of 18. So therefore there's a loss of 1,000. So I'm just going to circle that. Loss of 1,000, and it's in red, and that is going to go as a expense. That would be a selling and distribution expense in the P&L. Okay, so that's one figure. I'll just go up here. That's one figure done. Second figure I'm going to do is the purchases account. So again, we could balance it off and do all that. So I'll do it very quickly. 536, 500. 536, 500. So the balance would be, in this case, 506, 500. 506, 500. It's brought down here. Balance 506, 500. So again, where will that go? That will go in the, I'm going to circle it, that would go in the trading account. That's our second figure, so purchases figure. Third figure we're able to work out now is the new delivery vans figure. The delivery vans, if we balance this off, add up both sides, we get 198 is the big side. So 198. The balance, therefore, is 158. So the balance of 158000. And that will be, I'll just circle it here, that figure there, the 158, is a fixed asset and actual figure for delivery vans. Okay, what we're looking for here now in the depreciation is your depreciation for the year and then your balance of depreciation, which will be your accumulated depreciation. So if we look at the delivery van account, at the beginning of the year, we had 150,000 worth of delivery vans for 3 months, because after we disposed of the van, you can see up here, our vans were then worth 158,000 delivery vehicles. So for the first 3 months, it would be 150,000 at 15% times 3 over 12 because it was for 3 months. What that would give us is 565. For the remainder of the year, we had 158,000 at 15% times 9 over 12, which would give us 23,400, giving you a total, giving you 17,775, giving you a total of 23,400. That's the figure we are looking for. 23,400. It goes up here, 23,400. Now, by balancing this account, we will find out what the accumulated depreciation is for the year, which is 67,400. Goes down here, 67,400. So here's my final two figures that I'm looking for. The 23,400 is my S&D expense, and my 67,400 goes into my fixed assets. That is accumulated depreciation. And when we look at the marking scheme, we'll see. So we have our 5 figures right there. Okay, lots of marks there. So go ahead, rewatch this if need be. Make sure you can do that note and practice it out. It very rarely changes.